Well, I think the first thing is to recognize the fact that the result is a reflection of the quality of the team we have. Credit goes to the doggedness, the resilience, and the creativity of the team. They are not, the team remains very unrelenting in terms of pushing hard and making sure that we hit the right numbers. I think that's one. And we've also seen massive improvement coming from an non-interest income, which moved significantly from, we achieved 180 billion in the previous year. Against 2019, we achieved about 231 billion, which is quite an impressive growth of 29%. On the back of that, we've also seen massive improvement in our digital incomes and fees that grew by over 108%, moving from 20 billion to 42 billion, which tells the interesting story of our digital and retail journey. So I would say so far, yes, it was a very difficult year, but we are staying true to our core values, and the team has been very, very supportive, very dogged, very resilient, and everybody is looking for how to get new niche opportunities and markets. So,
And speaking about opportunities, but I'd like us to just quickly talk about the fees on electronic products and the non-interest income. We saw that coming in strongly in Q4, and that obviously boosted overall our full-year numbers. Talk to us about this electronic product. I mean, very strong numbers coming in. Are we going to see more? Is there going to be an even more aggressive move in that line this year?
Okay, if you understand what we've been doing, last year was our first full year in our foray into digital and electronic, that's retail banking. So when you are looking at the digital income and fees, it's a combination of both digital and the retail fees.
Okay.
Last year was the first full year when we went full blast into the retail business. So we've seen that combined to give us incremental growth in terms of income from fees and electronic commissions. And Zenith is also, when it comes to digital, we are also, we have a bias for digital and investment in IT. We are leveraging on that to build very strong capability and competencies to drive business. There are quite a lot of product development which is targeted at very niche markets. We are also looking at some integration with various fintech companies depending on what service you have. In some cases, we are collaborating with fintech companies to drive payment on different platforms. In some cases, too, we are churning out new products just to create convenience for our customer. And we are seeing steadily a significant drop in businesses being done through conventional cash and checks to incremental businesses being done through electronic platform. For me in particular, in the last 1 year, I don't remember writing a check. Once I have my phone, I have access to my bank account. So that is what we are driving steadily, and we think that will continue to grow even as the digital economy in Nigeria continues to flourish.
And it's quite interesting that, excuse me, that Zenith Bank is working with fintechs now, because I've had that conversation on fintechs and banks and what the banking industry of the future would look like and the role that the fintechs would play. And there's been a lot of talk about the fact that we're going to see a significant reduction in brick and mortars, and if banks are not innovative enough or well enough, the fintechs might, have that advantages as well. But just listening to you talking about how you're partnering with fintechs, how important are fintechs to the Zenith Bank business?
If you take a look at what the fintechs are doing, they come up with bank-agnostic products. And these bank-agnostic products are acceptable in the market. When you come up with some products that are bank-led, bank-initiated, there seems to be some form of apathy from the customers. But once it's fintech-led, notwithstanding which bank is behind the aggregation and the settlement, it tends to be accepted. So what we are doing is, where we need to collaborate with fintech, we collaborate. Where we need to go it all alone and compete with them, we are not also scared to compete. We've always been a very competitive organization. So it's about what suits, what is adequate, what is proper for the environment and at the moment.
Okay, let's quickly talk about your loan book. That was obviously a big topic in 2019, the loan-to-deposit ratio, the CBN really wanting banks to push out more, give out more credit, especially consumer credit. And looking at your loan book growth, 22.1%, coming in at 2.46 trillion. Obviously, that reflects Zenith Bank's effort to reach that 65% loan-to-deposit ratio requirement of the CBN. Talk to us how that went in 2019. And for 2020, are you going to also be aggressive in giving out those loans? And I've been asking, when banks say we're giving out loans, I'm just wondering, is there good credit out there, just looking at the macro environment?
Well, for me, I would strongly believe that Nigeria is a huge market, is a huge opportunity. And if you look at the issue of the loan growth, one area where we are seeing steady loan growth is on the retail lending. Before now, retail lending wasn't attractive because of the issues around the character, issues around security, around collaterals. But when CBN emerged with enhancement of the BVN capability and the set-off clause in the offer letter, and you know the BVN capability we have is such that if you have a loan, if you default in your loan with a particular bank, if that bank reports you to CBN, with your BVN, you can be traced within the banking system, and whichever bank where you have money, it will be clawed back to repay your loan. And once that is done, you are blacklisted from also having account in the system. That has provided a very strong leverage and comfort for banks to lend. And before now, retail lending wasn't really that heavy. We are all going into retail lending. It's helping to create leverage in the system. It's helping to promote consumption. You see that for a young man who wants to buy electronic products, before, if you want to buy electronic product of 1 million naira, your salary is, let's assume, 200,000. You find it difficult to buy it right away. But right now, with the emergence of retail lending, you can buy an electronics of 1 million, take a loan whereby you repay, let's say 50,000 monthly or 70,000, so that you can repay in a period of 2 years. So you realize that you are not delaying consumption. You are creating consumption almost immediately, creating leverage because our system, our economy hasn't been leveraged. So if you look at that, there is a huge opportunity for banks to increase lending to that retail, and also the SME. The essence of the SME, if you look at what CBN has done with the loan to deposit, is to really boost credit to the to boost economic growth in the system, promote capital formation, and also improve our capital to output ratio that has been very weak. So if SMEs, the creative sectors are having access to lending, access to loan, you see a situation where we have individuals who are talented being able to turn their talent into creative enterprises. So that's essentially what we're doing, and we think that will continue to grow. Then for the big corporates, institutional banking, it provides opportunity for them to also expand capacity, especially with the upcoming African continental free trade zone. So we just need to build capacity. We need to enlarge whatever we are doing. We need to create standard, because I believe that Nigeria should be leading in terms of that African continental free trade zone. Otherwise, who should lead? Look at we have the market. We have the market, we have the reach, we have the technology. Nigerians are quite technology savvy. So I believe that the LDR is a laudable program which the banking community is supporting CBN to see that we drive growth in the macros.